Hello, my name is Cory Belyk. I'm CEO for CanAlaska Uranium. We're a project generator and active explorer in the Athabasca Basin of Canada. And we also have some great nickel assets in the neighboring province of Manitoba. So yeah, here we are, Matthew.
Here we are. You know, we are at the World Nuclear Association conference, which is here in London. The great and the good are here, and you've been attending that. So what's the vibe downstairs?
Oh, the vibe is really up. Like, this year is fantastic. We've seen a real change in the market. We've seen a change in a number of nuclear, pieces that fit into that, and it's just been a fantastic week at the WNA.
Right. So literally, people have flown from all around the world to this. They're super excited because there's this political narrative going around, energy security, energy costs. Nuclear seems to be the savior of the moment. Are there any things that, well, actually, what surprised you in terms of the conversations which come out of the conference this week? Well,
aside from being really upbeat and positive, Matthew, it's been just fantastic to hear about the marketing side, the conversion side, and some of the bottlenecks that are happening with the entire industry right now as we move towards that energy savior, if you want to call it that. So it's been just a fantastic few days listening to that narrative and how really positive and upbeat it looks for the market.
Okay, so tell me this. So to build a regular reactor takes a long time. You need all sorts of permissions from government level, local level. You need to then design it, build it, and we're 10, 15 years out. So is nuclear really going to be the savior in all of this?
It absolutely is, Matthew. You know why? Because SMRs, I believe, are one of those pieces, and they're being built much quicker than those large reactors historically. Right. And even I would dare say the large reactors are going to pick up pace in terms of their ability to deliver into the market much quicker than they have historically. Right. And that's really some step change there, and that's fantastic.
So tell me this, SMR, small modular reactors. These are basically smaller nuclear reactors, presumably cheaper, quicker to build. We've got obviously Rolls-Royce over here in the UK. There's a Westinghouse, rising from the ashes, as it were, as well. Are they a big part of the conversation downstairs?
They absolutely are. In fact, yesterday we heard a lot from Rolls-Royce and Westinghouse and just what that means, what they're doing. And these are modular units, basically plug and play. And I think that's the key, because that is going to allow it to be built off site. Mm-hmm. You basically deliver it into that infrastructure. Now, it can be new infrastructure, or what I'm hearing is it can actually be retrofitting some of the coal or gas-fired power plants out there, almost sort of a seamless transition, plugging into that existing grid, making it possible to do this on a much quicker scale than.
That's interesting. So literally they'll take a cookie cutter approach, right? One design fits all, but going and replacing coal power fire stations by sort of, I guess, taking out the dirty bit and putting in the new, over here the green taxonomy includes nuclear now, putting in nuclear, but then utilizing all the pipes, infrastructure, everything that's that. Okay, smart. But it's still going to take time, isn't it? I mean, how much time would we be shaving off the process?
Well, it's going to take time. But, for instance, in Canada, they're putting in some small modular reactors now, and it's going to take about 6 years from decision through to first power. Right. And that's happening at the Darlington plant, as an example. But what I'm hearing this week is that's actually happening globally. Mm. Whether it's Europe, whether it's UK, or whether it's in the US, this is coming, and it's coming quickly. And it's interesting to hear that it's actually not just in, certain few places or as demonstrations. It's actually happening. And that's really been eye-opening for me.
So it needs to be all joined up thinking, though, doesn't it? And I think Sama, who heads up the WNA, she's got her 3 Cs. Tell us about the 3 Cs.
Her 3 Cs, yeah. So how do we get here by 2050? You can't just wait till 2049. You have to start today. Start getting it in place so that by 2050, you've got all that capacity of clean energy, which is going to truly make that difference for global warming and the impacts on the planet. So she's got this concept, or at least mentioned the concept of the 3 Cs, right? So it's be creative,
right?
Collaborate, and importantly, commit.
Right.
And the collaboration, I think, and commitment piece is really important because, whether it's Rolls-Royce, Westinghouse, Hitachi, any of them, you've got to collaborate to get those units coming to market, in different designs. Get it so that it is truly plug and play. So they're not all really unique, but you can actually do this on a larger scale quickly. And then you've got to commit to it, whether it's companies, governments, regulators, or the public. Commit to that, and we can get there. We really can get there. So those 3 Cs are really important.
So I think the will's there, and the public is supporting it, because if they don't, their energy costs are a disproportionately large percentage of their income. It's painful at the moment. We've got price caps being introduced here by the new Prime Minister Liz Truss, and I think we've talked in the past about price caps elsewhere in the world. This needs political will. I think that's there, but governments move slowly typically. So 3 Cs, industry talking about what it's going to take is one thing. Have we seen any political input into this week's conference or conversation which leads us to believe that, well, I don't know that we're in the UK at the moment, but governments from around the world are going to be supportive of this?
Absolutely. In fact, yesterday, the Department of Energy of the US was on one of the panels, a representative. I think it was Catherine Huff, if I'm correct. And she commented that the Biden administration is just committed to helping assist this along, whether it's at the conversion piece, whether it's about domestic supply or small modular reactors, or importantly, keeping the existing fleet running longer than perhaps planned.
Right.
And that's supporting all of that infrastructure that's going to allow this to actually happen. So that's been a real big step. And I think that was just announced this week. Right. So that's a really big deal. And that's just one of the leading indicators politically out of well, it is the largest nuclear fleet on the planet, sitting in the US.
It is indeed. So there's a few things here. Okay, there's a few things in the background in terms of, right, that's all positive. It's upbeat. The vibe is good. In the background, we've also got extending the life of existing reactors. That needs to be done with some care and attention. Right, some engineers told me. And then we've also got the in the backdrop of all this, we've got Russia-Ukraine still going on, and there's a certain reactor there which people are a little bit nervous about at the moment. What we don't need is another Fukushima. So is there any conversation around that downstairs?
There has been. It's sort of been off the table for the most part, but the few conversations I've heard is that, I think the industry now can survive something that might happen because it is truly war related.
Right.
It's not going to be a natural disaster. It's not going to be a technological failure. It's going to be some sort of, military activity that might cause that. So is it truly the industry that has failed? No. This is a different issue. It's a geopolitical issue. So I think while it would be terrible, I think the understanding is it's really survivable, if you want to think of it that way. And I hope it doesn't happen. I mean, that's...
Absolutely, of course. But for the industry, okay, you're saying the industry thinks it could survive that. That's interesting. And we hope it doesn't happen. Absolutely. Let's talk about the equity side of things. That's where we're all here. We're investors. We're looking at companies like yours and going, right, how do these guys insert themselves into this big narrative that's going on, right? And I've got to ask myself, it's difficult out there at the moment. People are a little bit nervous, sort of generally. So, risk off, cashed up, and sort of waiting for the moment to go. And uranium's been a long time in the making in terms of an equities investment. So, you've been speaking to a few CEOs. How are they feeling about all this? How do they play it? How are you going to play this?
Yeah, they're extremely positive, Matthew. I mean, they are, because they see what is happening with, the conversion bottleneck that everyone talks about. Once that logjam releases, you still have to backfill that with uranium and primary production. So in our space at the front end, we're really a spear tip, because none of this happens without discovery of new uranium deposits, without putting those discoveries into production, without backfeeding that demand. And if we're talking 4 times by 2050, 4 times the nuclear fleet, combining large reactors with SMRs, that's the number that's been thrown around this week as potentially needed by 2050. That's a lot more uranium. That's potentially like 4 times the uranium required.
Wow.
So that is a huge piece to this puzzle. You've got to find it, put it into production, and get it to conversion and the utilities. And that's not going to happen overnight.
You don't start in 2049. We got it.
Exactly.
4 times. That's a big number. I hadn't realized the kind of supply-demand fundamentals had sort of expanded to that sort of level. So let's talk about the size of the market now. It's a small market. Uranium investors like to think it's the be-all and end-all, but the reality is it's a tiny, tiny, tiny market in commodities, let alone elsewhere in the world. There's a certain number of companies, public companies at the moment, and private companies at the moment. There's a lot of new guys coming through. We're seeing lots of new uranium companies coming through. So the guys who are there today, the guys who are at the table today, you kind of got to, is it a case of you need to be defensible, or the fact that we need all of the above, so it doesn't really matter if there are lots of new entrants coming into the marketplace? Because last time around, last cycle, went from 50 companies to 500 companies. Most didn't make it. Most lost investors a lot of money. So how would I, as an investor, look into the space and go, do you know what? These sorts of companies make sense, and these sorts of companies perhaps not so much. How do you look at it?
Well, that's a good question. So I was part of that last cycle, and I looked at most of those 500.
Where were you?
I was with Cameco.
You're
at the time.
at Cameco,
yeah,
right?
correct.
Yeah.
So part of my job at the time was to review these companies and watch what they're doing globally. So
were you smiling and laughing, or were you just going, "Wow, this is a bit worrying"? How do you look at it?
No, at the time, you could sort of get the grain out of the chaff.
Right.
If you just looked at them, listened to the story, went and looked at the project,
yeah,
you can kind of sort out who's probably going to make it, who's probably not going to make it. And
help me with that one, because that's the key, right? So when you're looking at these companies, when you're at Cameco, right? We were doing this with Cameco goggles on, right?
Yeah.
You're saying when you're looking at a company, you're going, well, that looks interesting, potential. This not so much. So how do you work that out? Because the same thing's going to be happening right now.
Yeah, absolutely. And some of that is the style of deposit.
Right.
Style of mineralization. It's the location of that mineralization. Okay. It's also geopolitical. There's lots of places you can do a lot of work, but are you ever going to mine the uranium? I'm not sure. There's places where you're going to do all the right work, make a discovery, and it's going to take you 15 years to get there, like the Athabasca, but you're talking about a grade difference, step change in that value per ton of rock. So it will more than likely get there. So there's a lot of discoveries being made. The question is, do they ever become economic? And how do you weed that out? That is challenging. But when you actually get on the ground with some experience and look at these things, you can start to differentiate where they may play out in a market that settles at some point.
Right.
And that's the key. Where does the market settle? The last cycle was about 3 years.
Yeah.
I think we're moving into a super cycle or a mega cycle like I'm hearing this week. And I think that's true because it's setting up with different fundamentals as a foundation that we've been talking about just in the last few minutes here. So I think this is very different from the last cycle. You're going to see a need, and that's going to elevate that price of uranium. It's going to make some of these sort of marginal deposits historically perhaps come into the market, and that's fine. But then you're also going to have the new discoveries that are very high grade that actually have some size and potential to them around infrastructure, like you might find in the eastern Athabasca, and those will come to market in about 15 years, 20 years, if you discover them today. And that's okay, because you're going to have some filling the gap for the next 10 or 15, and then these big ones are going to displace those down the track.
Okay.
And that's the key.
So you're saying it's fine. Each project has to be evaluated on its own merits, but as far as you're concerned, Athabasca, so when I first started interviewing Athabasca companies about permitting and licensing and so on, it was like, 2 years, 3 years, not a problem. But now there's a bit more honesty to the conversations, it seems. So look, it will take longer, but that's fine because there's just not enough of this stuff. Question is, you can place yourself early into the Athabasca projects, but know that you'll be sitting on it for a while, and that's fine as a portfolio approach to investing. And there'll be other projects which get into production a little bit sooner, but don't worry, they're not going to swamp the market. Yeah. That's kind of the way you should look at it, is it?
Absolutely. And in the last few weeks, I've caught a little flack for some comments I made because I was asked where I would put my money. And it is in the Athabasca. That's really what I know. It's in our backyard, and we're exploring making discoveries that make sense there, and that's good. But that's not to say other jurisdictions around the planet won't come into production to fill the next 15 years. That's going to happen, and that's okay. But what we're looking for in the Athabasca is something that is tier one. That is something that literally replaces MacArthur and Cigar, which are, both going to be offline within the next 15 years. And that's just reality. They're running out of reserve. So you've got to backfill that infrastructure. And that's the opportunity, if you can make that discovery, is to fill that. So that will come in 15, 20 years. That's fine. But you're going to need to know today. And that's okay, because there's a lot of value there that's pent up in these large, high-grade deposits.
Okay, so you came into CanAlaska. You've got your Cameco background, so you've got the Cameco optics that you're able to do. You come into CanAlaska and go, I know what this is, and I know what it's not, but this to me has got potential to be a tier one company, or I wouldn't be here. That's a decision you've got to make, because it's your brand. You damage your brand if you play another game, right? So what are you seeing at CanAlaska now? what are the steps that you guys need to go through to actually get to where you think you can get to?
Yeah, well, we're looking for that tier one, that high grade MacArthur cigar-like type analog. And we've been consistent in that narrative for a long time now.
Right.
And now we're starting to see those results come from our portfolio because we're exploring looking for those.
Right.
We're drilling 9 meters at 2.5%. Right near MacArthur River with our partner Cameco at our West MacArthur project. And that just has all the right fingerprints of one of these big basement type mineralized zones in the Athabasca. We haven't even tested the unconformity yet. We might be in the roots of a MacArthur River. We don't know.
Right.
But so what are we trying to do at CanAlaska? We're trying to find that tier one asset that is going to help feed the Key Lake mill in 15 to 20 years time.
Right.
And the value creation is at the front end. So when you discover one of these big deposits in the Athabasca Basin, it's literally the first, say, 3 to 5 years is where you see that value accretion. Yeah. Then you move into the permitting and licensing process. We don't want to produce uranium. We want to build value for our shareholders through that discovery and then get it into the appropriate hands through an auction process to take it to market.
Got it.
That's exactly our game.
Because you guys, well, way before your time, but it was always a cash constrained company. I met the guys 4 years ago. It was just cash constrained. It was tiny. No one cared what was going on. And then you can't do the work that you want to do.
Exactly.
So it's all hypothesis, theory, conjecture, right? With the market sort of just gradually sort of stepping up, where are we? What's the price of, what's the spot price today?
The spot price is around 51.
Right. So
US.
it's sort of getting there, from the lows of, mid-20s up to 30s for a long time. You're getting noticed. You're able to raise capital, and it's also driving the kind of share price and market cap and so forth. Is that's what you're going to have to do for the next 2-3 years, isn't it? Rely on the markets to do that bit of the heavy lifting for you. So I guess this week's narrative, that's why you're here this week. You want to hear it firsthand. Mm-hmm. But, here's the thing to ask you. So the utilities are here too, aren't they?
There's a few, yeah.
There's a few.
Yeah.
Well, are they European, or have you got some US guys?
The ones I've seen around are US based. Yeah,
okay.
Correct. Yeah, which are obviously one of the big players.
Right. They play their cards close to their chest and don't give much away. Yeah. But is anyone standing on stage, or are they just sitting back and observing?
Are they standing on stage? No, I'm not seeing a lot of standing on stage, but they're definitely in the wings.
So in the darks of the night, at a bar with a drink in your hand, are they giving anything away?
No.
Oh, God.
No.
Poker players.
Yeah, well, exactly. But, you have to understand that utilities have a need to procure that uranium. Yeah. And with the conversion bottleneck that's happening, that stress is starting to build. And that pressure is starting to build. Because if you don't increase the conversion capacity, you got to remember about 40% sits in Russia. Mm. So you've got a problem if you want to try and be prepared for what's coming in terms of new builds or extensions of, or whatever it might be. You're going to have to procure that converted material, and it's a real tight market for that. Okay. So the pressure's coming.
The pressure's coming with the conversion, and they're using up inventory. And if I look back over the last 3 years, there's so many catalyst moments, but I think the most important ones for us are COVID. Mm-hmm. Absolutely, it just ruined supply into the marketplace. You then Sput come along on top of that and start sweeping up this mobile inventory at a more significant rate. And obviously we've got Yellow Cake over here, and we've got the Kazakh one as well. And that's good news. We've then got this whole Russia-Ukraine situation, which has just created this hugely dense problem of cost of energy for not just homes, but also industry. We've got industry across Europe closing down. They just can't afford to keep going. That is going to have a serious knock-on effect for economies around the world. So the cost of energy is a biggie. Obviously, people look to in Japan, confirming that they're going to bring reactors online, and that's great. But that alone, compared to how many new reactors, how many SMRs, what you're talking about, and 4 times it's on the demand side, insane situation.
It is, and that's been really eye-opening for me. When I heard 4 times, I'm like, is that real? And it was stated, and stated openly. So that, I have to believe, is what is coming. And if you just think about the new builds coming from large reactors, but now you layer in the small modular reactors, I don't think that's factored into the market yet. I don't think it is. And some of those take different fuel. Mm. So you have to then create that conversion capacity to get that different fuel into these small modular reactors. You've got a lot of infrastructure to build out in a very short time to actually go where you want to go. And when that bottleneck releases, then you got to start thinking about the front end. Where's that supply come from? Where's the raw material come from? And yes, at high prices, you'll get it from around the planet in various jurisdictions. That doesn't change our game at CanAlaska.
Well, that's one. Well, let me come. I want to come back to that.
Game.
I want to come back to that because sorry, I got to segue myself off into the world of utility buyers. Here, important. Because you are saying, look, we've got a 15-year game plan here. We know where we sit. We are talking about building something tier one, which can feed whichever mill in 15 years' time, because we know who the players are and we know how this game works. That means that all recent events don't really change your game plan per se. However, you will be the beneficiary if prices drive up and equities follow suit because you will be raise cheaper money. So that's the game. That's your model.
That does not change.
Okay.
That does not change at all because we are clearly focused on a tier one discovery in a tier one jurisdiction that if you find it 10, 15, 20 years out, it displaces literally everything on the planet because it will be a cigar and MacArthur if we're successful. And that is slotting in the lowest quartile. So that doesn't change our game.
Okay.
There will be others come online, absolutely, and that's good. That's great for investors. It's great for the market. That's
all
fine.
Of the above.
But when you find something that's that good,
yeah,
then it just sort of slots in automatically.
You know what you said in terms of margin, right? I think that's the key. Marginal projects will become economic. To some degree, tier one projects will always be economic. I get that and I buy that. Okay, what's the one thing that you're going home with, say, that was the first thing you're going to say to your team when you get home?
I'm going to say the small modular reactors are real, and we've got to go out and make the discovery that's going to apply to that 10 or 15 years down the road. The market looks correct. It looks bigger than we anticipated, and it's coming. And we're gonna do all the right work to help that out.
Good man. Good to see you.
Thanks, Matthew. Pleasure.